If you have been paying attention, if you remember a few years ago, what was happening with GameStop stock. This was this little war between the mom and pop investors against Wall Street. And it became really, really crazy where they literally pushed the price of GameStop stock from 2 billion to 24 billion in a matter of days. And this game went on and on and on and on. A lot of people made money, a lot of people lost money. Today, the price of GameStop stock is $14 per share. And that's just part of the story. That's just part of the story. Let's get to Bed Bath & Beyond, which filed bankruptcy. This was a stock that made a Wall Street Bets trader $124 million, not due to fundamentals. Fundamentals had nothing to do with it. And this stock now actually, Bed Bath & Beyond, actually filed bankruptcy and was bought by, I believe, Overstock. And Overstock just completely took their name and assets for $21 million. And then now they're relaunched the website, because I was under the impression that Bed Bath & Beyond was out of business until I did a little research. And then I looked and see that there is one store here in Georgia that's open in Peachtree City. And then their website, and they have an Instagram page, Bigger, Better, Bed Bath Beyond. So essentially what they have done is taken Bed Bath & Beyond from a brick and mortar store and turned it into an online brand, which probably will be really successful. But here's the thing, the stock market is rigged. And if you don't believe it, go back to those first two stories of GameStop stock and Bed Bath & Beyond. Two companies that were on, well, Bed Bath & Beyond actually failed. Bed Bath & Beyond actually filed bankruptcy. And GameStop is fighting a losing battle because the way that people play video games and stuff is dramatically changing. But the stock market's rigged. During the pandemic, people were laid off. Company profits were falling, but the stock market was high. Why is that? One word, the Fed. And the Fed right now is dilly-dallying and playing around with the stock market. Right now, the Fed is doing, what's it called? Where at one point during the pandemic, they were printing money, putting money into the economy. I forget what it's called when they start restricting and pressing money and restricting. I think they're restricting like 80, 90 billion a month. And what the Fed is doing is raising interest rates, which hurts the stock market. And also the Fed is now trying to, because this is some of the things that control the stock market. Number one, hype. Number two, corporate profits. And number three, monetary prices. One of the biggest hypes of the stock market, and this was huge, was that AI was going to revolutionize our lives. AI was going to change everything. And this happened, and you saw the AI videos. I saw YouTube channels that were talking about AI go from nothing to 2 and 3 and 4 and 500,000 subscribers in a matter of days. Not months, but days, because the AI hype was so really pressing. And the AI hype hit the stock market, and the stock market went up. But I got a question. How has AI changed your life? There has been no big change in the way that we live our lives in America at the moment. So the AI hype was just that hype, and it's over. And now the stock market is going down. Let's talk about corporate profits. Corporate profits have been down for the last 9 months. And more than likely, once all the data is collected, corporate profits will be down for the whole year. This is huge. This is where the real economy starts to intrude on the phantom economy. Because once again, the stock market is rigged. Now, I will say this, if you know how the stock market works, and you're schooled and you're educated and you know the things to do, whether it's rigged or not, you can make money. And there's a lot of people. There's a ton of people who are participating in the stock market. And this is one of the things that happened with the GameStop and the Bed Bath Beyond. A lot of regular, normal people got into investing and playing the stock market. Now, due to the Fed crushing the stock market, well, with monetary policy, the raising of interest rates, the game is kind of hard to play. And a lot of people have pulled back. A lot of people have really started to struggle dealing with the stock market. Now, again, I want you to really think and just think back to the pandemic and think about what was going on. People weren't working. Companies were shutting down. And the stock market kept rising and rising and rising. This wasn't due to fundamentals. This was due to hype, corporate profits, and monetary policy, which will explain to you that those three things can drive the stock market even if the companies that are a part of the stock market are not doing well, in the case of Bed Bath & Beyond. This Bed Bath & Beyond is a company fundamentally was struggling, fundamentally from doing the things that they needed to do to be a successful company. Did not matter. Tons and tons of people made money off of a company that was failing, of a company that was struggling, of a company that had weak corporate profits, weak functionality, and as of today, most of their physical stores have closed. But that did not stop a bunch of people making money from this game, because the stock market, for many practical purposes, has been rigged. And if you can come in with the right information and know exactly what to do at the right time, it doesn't matter what the performance of the company, of the stock that you're buying, doesn't matter. It's not even important. What matters is the game, the stock market game. And this is one of the things I've been seeing. Now, there are stocks out there like Apple, Alphabet, Meta. These are companies that produce a lot of money. These are solid companies that make a lot of money. And more than likely, if you buy your stock and hang on, you will make some money. But if you look at companies outside of the big boys, outside of the Apple, and you start to look at the whole stock market, there's a lot of companies out there that are garbage, that are trash. And without the support of the FANG companies, the stock market would not be doing, it would be crashing. It would be crashing. So one of the things that you have to do if you want to play the stock market game is to educate yourself on what's going on. Once again, I am not an investor. I do own stocks. I do have a portfolio, but it's not something I spend a lot of time on. But if you want to play the stock market game, you need to know how the stock market works. And hype, corporate profits, and monetary policy are big drivers, because the Fed is doing everything it can to destroy the stock market. The stock market's been struggling. Why? Due to monetary policy, because we've come out of the hype cycle and we've dealt with falling corporate profits. Now we're dealing with the Fed, and the Fed is doing what the Fed wants to do to the stock market, and it's falling and it's struggling because of monetary policy. Now, how long will this continue? Because there's this thing. There's been a lot of predictions. There's been a lot of stuff that the Fed is going to drop the rates. One of the things I have noticed is the rates have not dropped, and it keeps getting pushed because the rates were supposed to drop in May, and May has come and gone and it didn't drop. Then they were supposed to drop in July, and July has come and gone and it didn't drop. They were supposed to drop in September, and September's come and gone and they haven't dropped. So the Fed should be dropping interest rates sometime in 2024. I really don't know about that. I really don't know about that, because one of the things is, even with the Fed raising interest rates, inflation still is kind of nudging up a little bit, and this has not destroyed the housing market. The housing market is still performing at a very high rate. I don't know if the Fed will drop interest rates in 2024. I know that's a very big statement, but looking at how things have gone and looking how the Fed is playing with the market, we don't know. And this is what's funny. The Fed is not a government entity. It's a private organization. It's not a Federal Reserve. It's nothing to do with the government. It is a private organization that is controlling the principle of the United States government, well, the economy of the United States. Because one of the things I look at is, and this is a strange tale, you would have someone who's a regular person, and they would run for the House of Representatives, and they would run for being a senator. And if you will look at it, and this is over and over and over again, someone who goes to Washington, who becomes part of the inside, they get the inside details. A lot of these people get fantastically rich during their time in Congress. I mean, many of them don't even need their congressional salary because they made so much money doing other things because of their inside knowledge and the ability to act and to make moves and to take measures, because they get information first, and getting this information first allows them to make very profitable moves. And you know, if you want to get rich, just get elected to go to Congress and stay there a long time, and you can get rich based on just on the inside information. And once again, this isn't like insider trading. It is and it's not, because when a company comes to Congress and they have a closed session and they have to divulge all these details, these congressmen are, these congress people are getting some inside great information that they can use to budget and budget their private wealth. They get information on what's going to happen. They know when to buy, what to sell, what to get rid of, what to keep. You know, Martha Stewart went to jail for insider trading, and it was just kind of crazy. But even with the threat of jail, I don't think it does anything to dampen insider trading or to dampen the knowledge bases that are happening, to dampen any of these things that are going on. So what we have right now is a very interesting situation with the stock market based upon hype, based upon corporate profits, based upon monetary policy. And right now, monetary policy is killing the stock market. Just killing it. And until monetary policy changes, we're going to continue to see what we're seeing with the stock market. Now, this is something else. Let's talk about real estate. Monetary policy has heightened real estate because it has driven up the prices of houses 30%. And these interest rates have not stopped people from buying houses. This is kind of like a pet project of mine, to study the stock market, to really look at it. And I am continuing to see houses. And one of the things I'm looking at various price points. And what I'm seeing are houses $1 million to $2 million will come on Zillow Sunday and be under contract by Friday. And then I'm seeing houses like 600, 700, to 500 to 400,000. They kind of stick around on the market. Or if the house has an issue, there's one house I've been watching. It's been on the market for 8 months. They've done price cuts. Actually, they had an open house. I went there, and I can tell you what's wrong with the house. The house is a ranch. It's just a one level. It's a ranch, but it does have like a basement, a real dark, bricks and stuff on the wall type of basement. The house was built in the 1950s. And it's a nice house in a very nice neighborhood, but there's just certain things that I've come to look at, that when a house is in really nice and it's in a nice neighborhood, but it doesn't sell, there's usually something wrong with it. And what's wrong with this house is the layout. The layout is just funky. Even though they have come in, they renovated it, the layout is still very, very funky, because you walk in the house and the kitchen's nice, and then there's this weird little room. Then you go to this master bedroom, which is huge. And then you go to this master bathroom, which is huge. But the house is just funky. It's got a funky layout. And this is why it's sitting on the market so long, because there are houses that are going for more than what they're asking for, and they're flying off the market. So one of the things that you will see is with properties in real estate, if it's a good property, price doesn't matter. The sucker will fly off the market. But if it's a property with issues, it will tend to stick and hang out because the house has issues. And this is some of the things we're going to continue to see in this economy as we continue to eve and delve out. But that's all I got to say about the stock market, which I think is a rigged game, that if you know what you're doing, you can win the rigged game of the stock market. You can win if you know what you're doing.